Hello friends, how you guys doing? Welcome once again to our channel. All right, so in today's video guys, we're going to talk about something so important. Have you ever wondered, in a trading, that the concept of buy low sell high sounds simple now, and also sell high buy low, also simple but difficult to execute. Now, the market makers are the ones that understand this concept because they know they always measure whether the market is overpriced and underpriced. And with the concept of Fibonacci, you'll be able to know when the market is overpriced and how to wait for a retracement before you can join the trend. Understanding this concept will help you to be reacting to the market. All right, so in this video, we're going to explain how to use Fibonacci trading strategy, why Fibonacci is so important, and how to draw your Fib and retracement extension, and how you can backtest this using your instruments, and also how to define your risk management using your Fib level. All right, so if you like this kind of content, guys, please kindly subscribe to this channel. All right, help us grow. Like this video, share with your friend, and don't forget to smash that notification bell, all right, because that will help you to know when next we are publishing a quality content like this. Why Fibonacci? Now, there are two sides of Fibonacci. There are Fibonacci that is found in nature. You can Google that yourself. There are Fibonacci in every, even in human body. There are Fibonacci, the ratio within your wrist and your hands, Fibonacci level, and your ears, Fibonacci levels. But today we are talking about how Fibonacci affects us as traders and how you can take advantage of Fibonacci to help improve the results you are getting as a trader. All right, so the first thing you need to know is what are Fibonacci numbers. All right, we have Fibonacci sequence numbers. We start from 1 and 3 and 5 and 8 and 13, 21 to infinity. We have it down to infinity, and the easiest way to figure it out is when you add this to this, you get this. All right, you add this to this, you get this. All right, so these are how the numbers are being generated. But you don't need to crack your head around this because we already have a tool that helps us to simplify our Fib level. And I'm using a platform called tradingview.com. So I expect you to also use tradingview.com. At the tool side, we have the Fib retracements. We have the trend-based Fib extension. We have different Fibs here. Now we are using Fib retracement, and I'm sticking to Fib retracement because there's a way we customize the Fib retracement to not only detect the retracement, but also show you the extension. So if you pull out this Fib, just draw it in your chart, you will see different numbers. All right, yours might not be as clean as you just click on the settings, so you'll be able to see different numbers here. Then all you need to do is to select the one that applies to you. For retracement, I use 0.5, 0.618, 0.34. Then for extension, we are using minus 0.135. The reason for minus is for you to give you the extension, and minus 0.27. This is very, very, very important for extension, especially when you are in a corrective move, and also minus 0.618. All right, so the main tool for retracement is these two guys, and for the extension is minus 0.27 and minus 0.618. The most important thing is, when do you draw your Fib and how do you draw your Fib? The best way to draw a Fib without running into trouble and expecting a retracement and extension is on the first impulse. All right, so once market makes an impulse and a correction, another impulse, and a correction, another impulse. So your job as a trader is to identify this first impulse and draw your Fib from this point to this point. Wait for this retracement to happen and take a trade from this point and expect this ride. Okay, and also draw a Fib on this level to this level. Wait for this retracement and take this trade. All right, so this is the best way and the simplest way to draw a Fib. right, in every market. So assuming this is your impulse and a correction and impulse, you take a fib here, you put it from the beginning of this trend, you draw it here, expecting 0.5 to 0.618. You know, most times it can overshoot 0.5 to 0.618 with a slight difference, but you just need to like know the exact points. Know that you have come to that level where taking a sell is no. All right, so you're expecting a turn, right? Because you have an expectation that the market will turn at this point. So you find out what happened, the market actually turned. The market actually turned at this point. Then you went to your what? Take profit. Then at this point again, 0.27, you are waiting for market to give you a deep retracement, also continue moving high. Adding fib to our trading, you know, we help us to trade with confidence because it helps us to anticipate a certain reaction at a certain point, and from that reaction we'll be able to trade carefully and with confidence and not reacting, because there are two participants in the market makers and market takers. All right, so for you to be the side of market makers, you need to anticipate a certain move, and for you to be on the right move, you use fib to help gauge your decision. All right, so let's go into the real market now as we're able to establish this concept. All right, so I think this is also important. All right, so when you are drawing your fib in any time frame, you should always stick to that time frame to get the extension. All right, so because if market makes an impulse, a correction, an impulse in a lower time frame, if you go to a higher time frame, market might also make what? An impulse, and all this will be a correction and makes another impulse. And if you go to a bigger time frame, this might be a market making what? An impulse, and all this will be a correction and makes an impulse. So you can see, you know, most times this is correction for a bigger time frame, and this a correction for a lower time frame, and this will be another correction for a smaller time frame. So this is what we call the fractal nature of the market. All right, so and it continues like this. That's why if you are drawing a fib on a certain time frame, remain on that time frame until the extension is hit before going to a higher time frame. The first thing you need to identify is an impulse, the first sharp impulse that moves contrary to the trend. All right, so and that's the beginning of a new trend. All right, so looking at this market here, you know, depends on where you are coming. When you are coming into the market, we saw what a market is giving us: an impulse, a correction, an impulse, a correction, an impulse. So the market is moving downwards here, and suddenly we have this sharp move. So once this is established, the first thing you need to do is to draw your fib at that point, because that is the first impulse. The first impulse, always look out for the first impulse for you to be on the safe side. You can see exactly the market comes to 0.618 and the target is 0.27. All right, this is your entry and this is your take profit. Also, you can see here the market is making a higher high here, and suddenly we saw this sharp sell-off. Okay, the market makes a sharp impulse down, right? So what are you going to do at this point? You're going to put your fib here, draw it to this point, you know, wait for this retracement to come and expect the extension. You take a fib here, draw it to this point. So we draw a fib from here and ended here. So this is our 27, right? And this is our 061. Even though it didn't get to 0618, you know, at this 27, it reacted and finally it started pushing high. So you can see, simple concept, very profitable. You don't need to draw your fib everywhere. Just identify that first impulse, draw your fib on that first impulse, then expect the market to give you a retracement, and then you wait for the extension. All right, so if you take a look on other instruments like pound yen, you can see the same concept applies everywhere. Now, the most important thing is look for the first impulse. All right, identify your first impulse, which is here. Take a fib downwards and wait for your retracement and extension. You see the retracement came and it didn't hit the beginning of the move, and extension also cleared. So once you've taken it and if the market continues moving down, that tells you that the trend is extended. The trend has potential of moving high lower. So you can take another fib here, and as this market breaks here, so we will be expecting this target to hit. Now if I should take a fib on this move, the market is coming down, the market is trending down here, and suddenly you saw the first impulse. Without the first impulse, guys, there's no need putting your fib in a ranging market, all right, because that would be a waste of time and resources. So you take a fib from here, you watch it, the retracement actually hits, and the extension. So as the market continue pushing high, so you're drawing your trend line, following the market. As the market keep breaking and pushing high, you are taking a fib from here again to this point. Watch out, it will hit, and the extension and the retracement will hit. And if you keep pushing high, you keep trading or trailing your stop loss. So guys, this is how we do it. Now for the risk management and your stop loss, anytime a trend is broken, for instance, you are taking a trade here, you draw your fib, retracement came, you retraced, and you enter the market here. The safest place to put your stop loss is at the beginning of that trend, because that is when the fib will be invalidated, or that trend will be invalidated. If the market decides to hit your stop loss, that tells you no need putting that fib again, because this whole move is not moving anywhere. It's going to come down, comes up, and start moving down again. All right, so that's why understanding trend is so important if you want to be profitable in your trading, especially using your fib. In case you've not watched the video on trend line strategy, please kindly do so, because the link will be below this video. All right, so in summary, guys, the most important thing that matters is your first impulse. After your first impulse, watch for this correction. Okay, put in your fib on the first impulse, wait for this to hit either 0.5 or 0.618 and ride the second wave. If you keep doing this consistently, you discover that you will be on the positive side, on the winning side almost every time. I believe you'll enjoy this video, and I believe you have gained value from this video. Please guys, don't forget to subscribe to this channel, don't forget to like this video, and don't forget to click on that notification bell for next valuable content like this. Thank you.